So I think you need to appreciate what many people have said, which is that the size and scale of the Islamic finance industry has been growing, and obviously people are very familiar with numbers being bandied around like US dollar 1 trillion in assets and so on. And the point is, what that means is that Islamic financial institutions are growing in scale and growing in geographic scale as well as in product scale. And that has two implications. So one is, when you start looking at the products and their balance sheets, you will see increasingly mismatches, structural mismatches between inflows and outflows. And similarly, when you see geographic diversification, what that brings with it is currency risks. And so derivatives, Islamic hedging is actually about helping institutions like that address the risks that they are carrying through their balance sheets, through their activities, such as currency, for example. And they're well-known products, they've been around for a while, and really, in a way, it's the fact of the increase in size of the industry, it's what's really led to the growth in the demand for these products. As I said, one of the main use of hedging as a tool is to manage the risks that are now in the books of Islamic financial institutions. And in my conversations, certainly that I've been involved in with the Sharia scholars, there's a widespread recognition that risk management, prudence and risk management are both appropriate and indeed necessary. And carrying risks which can be managed is, in itself is a questionable activity. So, while I think Sharia scholars obviously are increasingly becoming familiar with the underlying products themselves and how the hedging is taking place and effected, and that's something that is developing itself over time, the basic principle of is hedging appropriate, I think to my knowledge at least, there's no debate about the appropriateness and the prudence of risk management. And indeed, as I say, some scholars I think would even go so far as say the necessity for it. I think the range of products that's commonly being used is actually pretty limited, and it goes back to two of the things that I hinted about largely a few minutes ago. One is currency risks. Increasingly, financial institutions are taking currency risks because they are operating in different countries. They obviously report in their home currency, so they face exchange risks, as indeed do their customers, and a car importer in the UAE importing cars from Europe is clearly facing currency risk as well. So part of one of the basic products is foreign exchange or foreign exchange related and currency risk related. And the other risk that we're seeing being addressed regularly is profit rates, where the rates that are being earned or achieved or paid are one, and on the other side of the balance sheet is a different, fixed on one side, floating on the other, or floating and fixed. And so profit rate swaps, which manage that exposure, are another product that we see regularly. And I don't think, whilst there are other products as well, I think fundamentally my information, my understanding is, those two basic products, foreign exchange and profit rates, are, where the great part of the actual necessity or the requirement for hedging is. So I think the change in the market has been the increasing acceptance of the necessity for this sort of risk management activity. And as I was explaining earlier, I think that in itself is a function of the growth of the market. I think as the market has grown, the need for it has grown, the demand for it has grown as well. And whereas some years ago, we were in a situation where there was much less need for it and actually, a good deal of debate about it, I think people have learned to realize what the need is and readily accept it. And I think that's the basic evolution that we've seen. And actually, frankly, the financial situation of the last few years and how it has impacted both conventional and Islamic institutions, I think simply underlined the importance of this product area. I think there are two or maybe three broad aspects, I think, in terms of challenges. One is, I think, just information and education. I think, unfortunately, there's still quite a lot of confusion about exactly what these products are and how they work. But I do think the activities of yourselves, of IFM, of ISDA and others are helping to spread the knowledge a little bit, and people are becoming much more familiar with both the use and the composition, if you like, of these products. I think the other area is the recognition that it's not simply about the products themselves. In order to be able to, as an Islamic financial institution, in order to be able to deliver this product to your client, you need an infrastructure, you need an operational infrastructure. That goes from everything from legal documentation to the capital side, with the operational side in between, and the systems and the management and so on. So I think that there's as some institutions obviously are very far down that road in terms of having the infrastructure in place, I think other institutions probably are still at the early stages of putting that infrastructure in place. And I think that's, in many ways, things like standardization will help those institutions in particular to move forward, and I think make a larger, a wider and more competitive marketplace.